Yo, 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 yo. Welcome back to the channel. Oh, what a day. What a day in the markets, guys. Dude, AMC, this is a purple candle, but it says it's down 0.55%. Well, I guess it's down from the previous day, right? But you actually had a little recovery here for I don't know, guys. This looks a little like it kind of wants to turn around. But yeah, so we'll dig deeper into that. I'd like to look at like the hourly chart and stuff like that, zoom in. But what a day in the markets, man! Like, dude, I mean, SPY now down another 2%. Right? We've been covering SPY, covering these key levels. Remember, we drew this fib right here. Oh, this actually looks pretty good. And look, you're hanging right above that 786 right now. Definitely gonna be interesting to see what futures are doing. I don't know. Probably not open right now. Right? They're probably closed by now. Yeah, they're not active. So, yeah, dude, you're seeing knives all over the place, right? So like yesterday, you had the big knife on Netflix, big knife on Peloton yesterday. All these charts, man. Look, if you've been following me on Twitter for a while now and just kind of hearing some of my narratives surrounding whenever I do, because I mostly talk about AMC, but whenever I'm talking about other stocks, like a lot of these, staples, Amazon, Netflix, everything like that, we've been in SPY, we've been talking about how they look like they're forming these giant rising wedges, right? And this is just, I mean, the beauty of technical analysis, right? You can identify the momentum slowing down in the market, right? If you are not using technicals, like, yeah, maybe you can have a sense for the price slowing down, right? But when you're making new all-time highs, if you're not using technicals, you probably don't really understand how bad this price action actually looks, right? Because you're like, oh, well, new all-time high. So, but once you start seeing the stopping action here, like this is a 3-day chart, right? And you're looking at this as a rising wedge, you go, this might be a bigger dump, right? And that's what we're getting here. So, you can see here that for from a recent standpoint, you do have a key level here. You're hanging right above this 786 Fibonacci. 436.09. Are my numbers big enough? Let me make them bigger just in case. Oh, this is pretty big, but we'll make them bigger. So yeah, what is this? 436.09. Let's move that up. Just take a look at this level. See here, this is some of the support that you've seen historically on this line. You got rejected down, but then ultimately you recovered here and continued your uptrend. But look, you're just not getting that, right? You're getting stopped out every time that you approach this green line at the top. Price gets stopped out. And so yeah, you're seeing this broader market dump, right? Amazon, I've been tweeting this all day. Looks very distributionary, like distributive or whatever the phrase is I'm supposed to be using there. But I mean, this is the daily chart, guys. Amazon is down almost 6% on the day. And I'm gonna be honest with you, looking at like Kramer tweeting out the Goldman Sachs thing, saying, or not tweeting out, I'm sorry, he said it in a broadcast. I mentioned this yesterday, saying, oh, Goldman Sachs at this price is a great value and blah, blah, blah. We all know, and we've seen it with Netflix, guys. Like, man, I don't know. And then today he also tweeted that you're going to start seeing money come out of crypto and go into the stock market. And so now what dude, I'm telling you, doing the opposite of what Kramer says is just like, I mean, you saw it. delisted. Netflix. We talked about this yesterday. He tweeted probably like right here on the chart. He tweeted out saying, "Buy Netflix" right here. And literally, it didn't even take a day, and Netflix starts falling off of the face of the earth, and then has this terrible earnings report, and it's now under $400 from when he tweeted $620 was the price. I'm gonna pull the tweet just in case so that he can't be like I'm doing like defamation or something. But he literally says, Netflix buy and it dumps that. Why can he do that without like the like it's not financial advice or whatever? What's up with that? Is there a rule? Hold on. I'm trying, guys. I'm trying. Hold on. Is that a thing? Can somebody explain the legality behind that whole thing to me? Is it because we're on YouTube or something that we can't do that? Oh my, dude, I cannot find the tweet. Okay, I'm going to his profile. No, that's not going to work. Anyway, watch the video yesterday. It was around here somewhere, okay? 600, whatever. Say it's 540 just in case. It's definitely here or lower. And it just jumps off of the face of the earth. And for you to, it's a daily chart. It's definitely up here. I don't know. I'm not trying to say that he knew, but like, come on. Are you kidding me? Netflix is in this giant rising wedge. It looks like Wyckoff distribution. I mean, it's like textbook up here distribution. Price is slowing down the same way that you saw in SPY there. I mean, this is a clear bearish reversal pattern. So look, what I'm telling you is Goldman Sachs, right now, he's touting it. He's touting banks, essentially. Goldman Sachs, whatever. He's touting it. And I'm not trying to tell you, this is not financial advice. Look, I'm gonna say you should not do what people on TV or the internet say with your finances, okay? You need to do your own research and due diligence. But this thing looks like it is ready to tank. And look at this selling volume. Dominant selling volume, guys. Dude, I'm telling you, this thing, whenever this thing, I'm hoping that it bounces, honestly. Because me personally, not financial advice, you shouldn't do it unless you really understand the risk that you're taking. I am buying long-dated, irresponsible puts on this. I'm going for the anti-Kramer, dude. I'm trying to catch the Netflix. I'm trying to catch this. This is beautiful, dude. These puts down here, we're going to talk about AMC in a second. These puts down here, guys, if you had completely unreasonable $400 puts on Netflix back when it was $600 when he tweeted this out, and you long dated them out and waited just a few weeks, you would have 100x'd at least whatever you put in there. And I'm not saying it's a risk-free trade, right? Obviously, you can just blast off and just really, really do you dirty. But this looks like it wants to, do something similar. And, I played Amazon puts today because this thing it just broke this. It broke this level, and I bought long-dated puts. And I just said, you know what? I'm gonna bet against it for the long term and whatever. Crypto, also, obviously crypto is very connected to AMC. We've seen historically whenever crypto has these big dumps that AMC historically pumps. So it's something to be mindful of. Again, Kramer said today on Twitter that that he can see money coming out of crypto and going into stocks. And stocks look absolutely horrible right now, guys. From a technical perspective, stocks look horrible, okay? And the fundamentals are all terrible too. Yellen is just talking about inflation, and they could have never seen it coming and all that stuff. And Bitcoin's down here at 36,000. It just tapped off of it's 786 here locally at $35,200. I don't know, man. I don't know. Weird stuff's happening in the world. I'm not saying Bitcoin's going to 100,000 or whatever, but I mean, betting against this guy historically is good. Let's talk about AMC. All right, so today was Lou Day, right? I didn't mention him when I was kind of referencing this, just because I didn't want to be messy or whatever. But I just want to briefly talk about, and I'm not trying to be messy, okay? Let me tell you first how I feel about Lou. I think Lou is a smart guy. I think he understands things about the market that a lot of people don't, including myself. He understands certain things. In my opinion, he does. But I put out a video today on Twitter talking about this, and I'm just going to briefly go over it here, okay? Because he's talked about, he was talking about going into today how he wanted to see the price go to 21, okay? So he wasn't predicting it was going to go to 21 today, okay, guys? So I don't want anybody to say, oh, he predicted it wrong or whatever. But let's just talk about this. I'm proud of AMC and what AMC did today. I think that this is very good price action, especially all things considered in the broader market. It's only down 0.5% when SPY is down 2%, so that's really good. And I know it's probably got a lot to do with the rollovers and everything but anyway, don't worry about that. I just think that a lot of things that Lou says, he says very vague things that kind of confirm the people that he knows are watching him, confirms their bias. And we all do it, okay? It's human nature to want to please people, tell them things that they want to hear. Like, I understand that. But people think that he is, people tell me all the time, like, oh, you're wrong about everything and he's been right about everything. And it's just like, I don't think that he can be wrong or right in a lot of the things that he says, because he just kind of vaguely says things that could be happening and they sound good to the people who are watching his videos. Okay. So I'm not saying don't watch Lou, because I do think that there is some value to be had, but just like I tell you guys to do with me, and take everything that I say with a grain of salt, I think that his audience would benefit from that mindset towards his content a little bit more. And I understand that I have people that are very loyal to me and my audience, and I appreciate you guys. But I don't want anyone to be trusting anyone 100% with anything they say, especially when it comes to their money. You have to be able to do your own due diligence and your own research to make your own financial decisions, right? And always be responsible. Always be responsible, because when this is all over, Lou, dude, he's not gonna come, help you and your family out with whatever. You get what I'm saying? So, and I'm not either. I'm not trying to say I'm better than him in that way. Again, I got respect for the dude. I think he's funny. I'd hang out with him. I think he's cool. I think it would be pretty interesting if we could talk about Wyckoff together one day, but just take everybody with a grain of salt. That's all. That's my message, okay? All right, let's get into the technicals. So, we've been talking about these potential falling wedges that we're working on for AMC. There are a few different ways to draw them, because they start to because the move, it's a falling wedge is a reversal pattern, because it's indicative of bearish pressure to the downside slowing down. As it's really aggressive from the top end, right? So as price is pressing up, it's getting pushed down more and more aggressively. But when it hits the bottoms are less and less impressive, just like a rising wedge is for price action to the upside, right? So from the bottom, you can see that Netflix's price is moving up really aggressively. But as it gets to these tops, it's just slowing down a little bit. It's getting less and less impressive, right? And so then you're expecting a bearish reversal, because you're not able to get these very aggressive higher and higher highs in this way. So put it this way. Like this right here, it'll eventually turn into a rising wedge. Everything will, unless it's just a straight up parabola. But you can't draw a wedge, right? You can maybe towards the end here, right? And that's kind of how you can tell that a wedge is starting to happen, is that you start to see the price slowing down in this way, right? And then you break down, and then you come back up, right? So that's it's just the nature of buying and selling pressure. It causes this, okay? So one of these wedges, I think, will personally play out. That's my conviction, and I can be 100% wrong about this. But these are the lines as I have them drawn, okay? So you have this bottom line here. We'll color this one blue. We have one, you have resistance and support, specifically resistance right here, right? That makes this line valid, and then support, and now support here. You bounced a couple of times. So we'll make this one yellow maybe. And then this is your resistance line. You also have a larger resistance line that we've been drawing. So sorry if you keep, you keep watching the video, keep doing this thing. I just want to make sure that everybody's in the loop. And so let me see. I want to draw, sorry. Not looking right. Maybe it's from here. No, that's kind of like the flag, isn't it? Anyway, I mean, this is an epic fail. Dave, prepare your videos. You shill. At least Lou knows what he's going to talk about in his videos. He's way smarter and better than you, and he knows everything, and he's never been wrong about anything ever. I mean, he did say, not to buy the stock anymore, and then he did say that he is going to be buying tomorrow or whatever, like a few days ago. And then he did suggest that if we all bought it once to try and make the price go to $21, we'd find out if our orders are actually going through. And in July, he was saying that he knew for certain that the orders were being delayed. But other than that, I guess that he's never flip flopped on anything. Right about everything. So yeah, so you can see you got a few different trend lines. Sorry, I'm distracting myself by being petty. Look, I don't, I don't hate the guy. Right? Oh, I like this one. Look at this. This is the false breakout. I like this. All right. This is an old wedge. I had this before and it's still valid. I mean, you can draw it like this, where you have more potential downside. I think that you filled your gap today, which is really good news for AMC. My computer's getting choppy now. That's awesome. But yeah, you have a few different ways that you can draw this one. You draw it from the top here. You can say that you had false breakouts to the upside. Boom. Right here. You have this false break to the downside. You have touches here. Right? Or kind of support. Let me see. Yeah, like this. You kind of ribboned around this here, so you can see support, rejection. You break down, come back, retest, get rejected down. So I think that this is a valid line for sure. And if you go on lower time frames, you probably see candles closing underneath it. But yeah, so this would be kind of where I'm at with it. If you want to, okay, so we've talked about the possibility of going down to $14.50, right? $14.50, $15 before our reversal, right? And we base that off of this Fibonacci. You measure from the bottom of the buy button collapse all the way to the top of the run in June. Again, I'm like a broken record here, but you are now below your 0.5 Fibonacci. Okay, you've been rejected by it 2 times since you've been below it, 3 times really, after you tried to hold it as support here. And so now, I mean, you are kind of in territory where you do want to see this reversal up, because now you filled your gap, so you can't use the gap as an excuse anymore. If you don't turn around here, then you are going to 1450. Okay. If you do not turn around and break through this 1950 and hold above here for a little bit, and it can be an unimpressive move if you want it to be. I would prefer that you get some volume on it and you kind of go here. But that would be like your stepping stone. You want to see the price relatively soon, okay? Maybe you can come back down here, get rejected, come back down here, retest 1670, and then boom, you break out. You want to break this 1950, come back and retest, and then get a strong bounce off of here with, and then you go left and right like that. Okay, let me draw it again. Come up to 1950, reject back down, retest 1660, create a double bottom. You can even retest here, almost triple bottom, and break out. You want to get past 1950. Maybe you get stopped out at this $23 level. Come back for a retest of the wedge. That would be a little bit too much. Maybe you come up here, you test $20 or so, come back, retest the wedge, and then you want to get that bounce. You need volume on this retest, guys. That's what you need. So that's kind of the angle for the falling wedge. And look, guys, what I'm excited about with this, and I can't guarantee 100% that it's going to play out, okay? What we're doing is we're analyzing the chart. We're not trying to sit here and predict the future. We're analyzing the bullish possibility right now, okay? If this happens, this is a very macro. This is the most macro falling wedge, okay, that AMC has played, guys. 100%. Look, if you follow me on Twitter, we talked about this in the past few videos. Just because, and I keep on saying the same things because it hasn't changed a lot, but I just want to keep you guys in the loop, keep you guys watching what I'm watching, right? Let me show you the example back here. Okay, so back here, when AMC broke down from the 60s, broke underneath 50, it just crashed down here. It came to $32. I was calling for it to come down to $18 to $25 on Twitter. Okay, I didn't have a YouTube channel at the time. Until I saw this, right? And AMC likes, this is part of the identity of the stock. AMC likes falling wedges. It also likes rising wedges for bearish reversal. I saw this wedge and I went, holy shnikes, dude, I'm wrong. This thing is going to break out. If you follow me on Twitter at the time, this was like July, August, I identified it here. When you got support here, I was like, oh, shit, you got a falling wedge here. We hit here. I called this coming back here to this $28. And then, boom, you got your breakout. You came back for your retest, and you came up, right? But this wedge, right? This wedge from beginning to end, don't look at the percentage. This wedge only took 52 days. Let's see. Well, let's see. Is this wedge as long as that? Holy shit, man. 52 days. That sounds long. Then we had this wedge. This was after the $52 peak in September, okay? We tracked this all the way from the beginning to the end, right? And this is when I started my YouTube channel. Up here, we tracked this falling wedge. We were calling for the Fibonacci bottom, right? We said 35-ish dollars. Wait, it would have been measured from. Hold on. All right, I got too many lines on the chart. That's the bad part about the extended lines. It kind of makes it look so noisy. Let me see where. Oh, you know what? This is on log scale. I was measuring without log at the time. I use both. I like both. This is the move. No, this. Yeah. So we said, hey, you know, once we got all the way down here, okay, I'm not saying that I called it from all the way up here, but as we progressively watched the technicals play out, we got rejected down here. I started saying, okay, look, if you don't hold this golden pocket, you're going to come down to like this $35, $34 range. What did we do? We came down, boom, bounced right out of the wedge, came back for the retest, and then we were off, right? We went up to the $45-ish level. And then we kept doing these rising wedges. Now, this one took, let's see how long it took. This one took 17 days before its breakout. So what did we have? We had like 50 days on the first one before it eventually broke out. 36 days, and then you had your breakout. So let's see how long we can say that this one's been forming. Oh, here. So let's do it off of this initial resistance here, because now you're being held under by that again. And look, this line is a more, again, you can do multiple lines, guys. Okay. So this is a more optimistic reading, but it is valid. You have bull traps here, and then you get rejected down. So this line of resistance is a key line of resistance, okay? And then what did we do? We did this. And and look, people are going, oh, you just keep redrawing it to make it fit your narrative. That's what I'm saying. They form over and over again within each other. So you can continue to draw the line lower and lower, because it's not just the candles, it's also the mood of the stock is what's causing this, okay? But I think you could have a breakout here, but if you don't have the breakout here, oh yeah, I was trying to figure out how long this has been playing out. Sorry. Right now, that's what it is. 44 days in, okay? So this is longer than this big guy that led you to $52, okay? And this was a significant wedge, okay? But this one is the biggest so far. 44 trading days versus, where did we form here? Let's just say it was here to the bottom, 36 days. So if you broke out of this one, it would be a much bigger and more explosive move. Now, what can happen alternatively? Well, you can break up out of this, the one that I had just drawn, and then get rejected down by this line up here, right, which is your general resistance. You can get rejected back down here, and then you can have continuation to the downside. I would imagine that now this gap is gonna perform as support for you. So you could see a situation where you go up to $22 to $23, and then you catch a double bottom at 1684 or something. Boom. So it looks something like this, okay? These are the types of moves that you've seen before, and you can actually see it go lower too, just like you saw back here. Right? See how you have that lower low like that? And then you also had that kind of here, a bigger version, right? So you could see that sort of move as well. So then if that were to happen, then maybe you have this little fake out down here to 1550, boom, boom, boom. And then how long would this wedge have been playing out if that was the case? 57, well, 84 total days. Jeez, dude. That's February 8th. I mean, this is a monster, guys. Like, this, yeah, I don't know, man. I mean, me personally, I'm still bullish, okay? Long-term bullish. We do short-term analysis to see where we're at on a day-to-day basis, but we're long-term bullish on this channel. That's how I am. I am fully expecting this thing to eventually go into 3 digits. I had somebody comment on one of my videos and say, oh, this guy was saying Wyckoff is definitely going to send this to $200 plus. Now he's saying $40. That's because the price, it can't, and let me know in the comments down below if I'm wrong, but without going to $40 first, it cannot go to $200. So we have to be able to go to $40 for, unless you know of a way that, or historically, if you've seen a stock jump over a certain price point and not actually be that price at any point before it got to a higher price, I don't think that's how it works. Math. So yeah, so that's where I'm standing on that. Let's draw this line like this. See, this line actually becomes a little bit more optimistic if you draw it like this, because now you've created a hard bottom with this. I guess it isn't actually optimistic, because then you do have, if you don't double bottom here, you could get sent down further into this wedge, right? So that's the nature of these wedges. Again, we're basing our, to me, I don't see a way that you can go below 1450 ish and not have some sort of bullish reversal in this pattern. I just don't see that happening, okay? So me personally, and again, do your own due diligence, come up with your own thing, and I could be completely wrong. I'm just a guy on YouTube, guys, okay? You have to be responsible for yourself. But for me personally, what I believe, okay, is the worst case scenario, me personally, the way that I'm handling my investment in this, is 1450-ish, okay, based on this previous resistance as well as this Fibonacci. My computer's lagging again, or TradingView is. On log. Based on this correlation, guys, I am confident. I mean, you gotta get your volume, okay? But if it does this and it breaks out like this and you see $26 and you have volume continuation to the upside, I'm going to be very, very bullish, okay? That's me personally. Okay? And again, always manage your risk. Always be responsible. Because no matter how right you are, you can still be wrong. And are you willing to deal with the consequences of being wrong? That's all, that's what I'm going to say on that subject. I just always want to remind you guys of that. Nothing is more important than that. Lou is not going to pay your bills. Unless he said that in a video, in which case he can pay my bills for me if he wants to. I'm totally down, but I don't think that he's offering. Definitely not offering to me. So that's where I stand on it. So that's the more bearish case where you kind of have your continuation down into this region. And also, by the way, we do have a correlation here. If you pull the Fibonacci from the bottom before the run in January, I just want to remind you guys, super important to do. And then you go all the way to the top of the pre-market high, which is $25 here. You can see that you kind of hung above this 618, okay? Oh, yeah, I drew this before, so this is kind of interesting. I guess I'll put pre-market up so you guys know I'm not lying, but you could go look at the chart yourself. You're a liar. There's no candles up there. It didn't go that high. So here you go. Boom. 25.72 on my chart at least. And then you do the same fib here. You could see you got a case here where this sort of, you could have this sort of fractal play out, which again, we don't like to rely too much on fractals here anymore. First time, I'm not, I just don't, I don't know. That's just not how I've ever handled charting before. I kind of went down the rabbit hole with that, and I never want to go back. But you could see this sort of situation kind of play out here, right? Like you can see. Oh, I copied too much of it. Sorry. Perhaps you'll see this kind of rounding out here, and maybe this was the fractal all along. I don't know, but I could see a similar sort of move where maybe you have a pop up and then you kind of just crawl along, right? Crawl along the 618 before you eventually break out. And then whatever happens to that breakout after, it just really depends on the volume. It's hard to predict, but again, you guys, a lot of people like upside targets. So look, what I'll do for you is I'll show you how I personally am targeting, or like how I'm looking at upside in the short term. If it does, do what I think it will and it breaks out, I'm going to be measuring a more macro swing up is using Fibonacci extension, measuring from the bottom to the top here. You can see that this was the 100% Fibonacci on log scale. Predicted the top really well here, $71.27. The top ended up being $72.82. So for me, for options, I would be getting out, me personally, I would be getting out at these sorts of levels on options, not financial advice, just what I'm doing. And then so if your eventual bottom, let's just say your eventual bottom is that 1470, this is how I'm planning my way out, right? So options, I'd be taking profit at these sorts of levels. As far as shares, me personally, I'm probably just holding on to my shares. I don't really plan on selling them, just in case. But when it comes to options, that's kind of my strategy. And then if you do it without log scale, if you want to do this yourself, you can also, I think the 3.618 was the predictor on log. Oh, you know what it was? I measured without the pre-market. But look here, 2.618, and then the $20 lands you right on that 3.618 here. So that one was a predictor. So these are the sorts of ways that I would just be kind of planning that sort of thing. I know apes never sell. You diamond hand your call option until it absolutely just expires, and then hopefully it's worth a lot more or something. But when it comes to options, I want to get some profit out of the game, dog. You know what I'm saying? That's my plan. But options are risky, so make sure you're managing your risk. Those things, they expire worthless. I have that happen to me all the time. But eventually it will pay off. My opinion, I will eventually be right. So that's what. When I'm right, I'll be right big, in my opinion, but I could be very wrong. So the 3.618 on this one is $263. Look, when they're going higher. But yeah, so that's kind of how I'm making my measurement. That's how I'm gonna figure out how I'm exiting my options and stuff like that. That's me personally. You can do whatever you want. But yeah, so that's pretty much it. Hopefully you enjoyed the video. This one seems like it was probably a longer one. Yeah, 33 minutes. It's a Dave special. Some normal Dave shit. Hopefully you enjoyed. Make sure that you like the video. Comment down below. This is the worst time to mention that. I should have said that at the beginning, but for those of you who are still out there, yeah. Thanks for watching until the end. I appreciate you. And yeah, enjoy your weekend with your family. Don't be stressing too much. Download TradingView, practice charting, guys. Learn, go figure out your own methods. We see so many people in the community in my Discord. Free Discord link is down below. I don't have a paid version of that at all. Go check that out. So many people share charts in there and stuff, man. Like, so many people are just engaging and learning in this community. I think it's so cool. So I appreciate all you guys. And yeah, thanks for watching. Until next time. Crawling in my skin, these wounds they will cure. Here is how confusing it. R.I.P. Chester, dude. I've been on a Linkin Park kick lately. Sorry about that. All right.